right. Today I wanted to talk about an aspect of option pricing that you may have heard thrown around. The terms may initially be confusing, but I'm here to get rid of that confusion. So what I would like to talk about today is intrinsic value versus extrinsic value. So let's bring up my handy notepad and we'll talk about it. Don't worry, we're going to go through all this. I got you. All right, hang on. So intrinsic value. Now, what is that? You may have heard it was like this option has $3 of intrinsic value. What does that mean? Intrinsic value applies to in the money options. And that dollar amount, the amount of the intrinsic value is calculated as the amount that it is in the money. So let's say you have a stock that's trading at $25 and you own a $20 call. That $20 call has $5 of intrinsic value. Now, it makes it kind of simple for us. Out of the money options and at the money options have no intrinsic value. At the money might have a very small amount based on like the cents versus the actual strike price, but it's really kind of minimal. So in the money options is the intrinsic value is how much it is in the money based on the strike. And out of the money options have no intrinsic value at all, so don't even worry about it. Now, the next thing, and I'll show you examples. Don't worry. I know you were thinking, boom, are you going to show me examples? I'm going to show you examples. So extrinsic value. Extrinsic value is the portion of the option price that is not intrinsic value, which I conveniently just defined for you. Out of the money and at the money options are all extrinsic value. Now, in the money options also have an extrinsic value. This value is also called time value. You know, out of the money and at the money options, they got to cost something. And so that what you're paying for is the time. Now, there's a lot of different factors that go into option pricing, and I'm definitely going to cover those in another video. They're called the Greeks. I'm going to get into them. One of them is the Greek that defines time value. It's called theta, but like I said, don't worry about that. We're just doing extrinsic and intrinsic value, and let me show you some examples. Let's choose something easy. This is the SPY chart, which got hammered today. Ford? Yeah, sure. Let's choose Ford. This is one of my pet stocks. I love trading expiring options on it on Fridays because it has weeklies, and usually I can get a bundle of options that are like 2 pennies each. Anyways, that's for another video. So let's go into the option chain, and this is going to be hard to see, so let me see if I can bring up my Zoom. Let's see if it works. I'm keeping my eye on it. Yeah, that works. Sure, yeah, that works a little bit. We'll move this down a little bit so everyone can see everything. I hope that's visible. There we go. That's the word I think I was looking for. All right, so intrinsic value. Let's take a look at Ford closed at $11.25. So right here you can see the gray or blue, gray, I don't know. I might be colorblind. Shaded areas, the shaded areas. There we go. That's a good way to get around it. The shaded areas are your in the money options, and the areas in black on Thinkorswim on either side of the option chain are the out of the money options. The right side of the chain is puts. The left side of the chain is calls. So let's take a look at something like the $8 call option right here. It was last trading at $3.27, and it's in the money by, $3.25. So you can actually calculate the intrinsic value. So since it was last trading, since Ford stock was last trading at $11.25. Excuse me. You could subtract the $8, that is the strike price of this in the money call, to calculate the intrinsic value. And that's $3.25. Now, it was last trading at $3.25.75. So at this point, it's pretty much all intrinsic value because it's pretty deeply in the money. But what about extrinsic value? Well, let's take a look at it. That's pretty much everything that's going to be out of the money. Now, most of it, once you get pretty close out of the money, we're so close to expiration date that most of these options have no bid or ask, or no one's trading them really. That's why they are 0 by 1 penny. You're not going to get anything out of them, most likely, unless there's a huge move in the underlying stock. But those kind of severely out of the money options really are not worth it. So let's go, if we're looking at the $12 call, this has no intrinsic value. It's out of the money by 75 cents. It's got a long way to go. Today is Wednesday, so I mean there's 2 days left, and it's got a long way to go to get into the money. But why does it cost it's 3 by 4? So I mean you'd probably get filled at 4, put your offer out there at 3, hope someone, you get a low ball option. But basically this 3 by 4 cents, this 3.5 cent average option, the $12 call, it's all extrinsic value. The only thing left, the only reason it has any value at this point is because of how much time is left. It's relatively close to the money. Ford doesn't move in 75-cent increments generally. It's pretty close to the money, but it's still out of the money. And so it has no intrinsic value because it's not in the money. But extrinsically, time value, it has, the market has determined that it has the average of, it's 3 by 4. When I say 3 by 4, it's 3 cents on the bid and 4 cents on the ask. You might get filled anywhere in between. That's why you like to use limit orders. But all that's left on there is extrinsic value, or the time value. And like I said, I will get further into how options are priced and how you can perhaps read the factors that go into option pricing on the option chain to tell you a little bit how that option will move. I know that sounds confusing. Don't worry, I'll break it down for you with examples, but I just wanted to give you an idea of what the terms intrinsic value versus extrinsic value means. So if you have any questions at all, please let us know in the chat. And thank you for the time. I love you, and I'll see you in the next video.